All right, people. We are back at the Cryptocosm. This show is all about how cryptocurrencies and blockchain-based solutions are going to revolutionize the internet, information, and money. And of course, once in a week, I try to talk to someone in the cryptocurrency space or the blockchain space, whether it's in Dubai or the UK or somewhere in Hawaii. There's always someone getting involved and trying to make a mark in the world. And I have a special guest. I believe you're in the UK, right? Is that correct?
That's right. Not as exciting as Hawaii, but UK, yeah, exactly. Yeah.
Well, but speaking about excitement, before we dive in, Phil, I heard you are at the Bitcoin 2022 Miami.
Yeah, I've got a few tired lines under my eyes for the week we spent there, but it was it was amazing. Like seeing 35,000 people get together and talk about they probably talked about 50% of the time Bitcoin, 50% of the time NFTs and Ethereum, but
right,
it was good and fantastic turnout and great conference, very well put on. So yeah, it was fun.
Awesome, cool. Unfortunately, I was here, but I was, checking out other people's, their live streams and, what they're doing at the conference, so a lot of really interesting stuff. And obviously you got the big names, mostly from the BTC side, but of course there were also other conferences which are kind of like around the Bitcoin 2022 conference area, I'm assuming. Is that correct?
Yeah, absolutely. So there was, you got kind of a calendar before going, which was sort of circulating around, which had all of the side events, and it was just crazy. There was sort of 10 different events a night, and things all day, and you could do breakfast, you could do lunches, so they go out their way to try and make it a worthwhile experience for everyone, and it was a lot of networking.
Awesome. Oh no, sure. Yeah. I'm with you, but I'm sure even also some of the folks who are watching the the show, they are they dive deep into the crypto space, so they know what's going on. So, but definitely. So, but definitely, before we get into what your company, AQRU.io. I want to hear your story, your origin story. How did you get into crypto?
Yeah, absolutely. And I left university and was massively into finance from day one. Caught the trading bug in kind of 2006.
All right.
So I was trading what's called long short equity, and did it as a broker and also sort of a couple of small hedge funds, things like that. Where I was kind of looking at market neutral strategies. And I did that for about sort of 10 years, and then moved out to Switzerland, where I was kind of broking a bit out there and, doing more derivative type strategies. So kind of spent 15 years building a really broad kind of financial, trading background. And I think I became aware of crypto around about sort of 2014, 2015.
Okay.
And, I think at the time when I initially looked at it, it was so volatile. I love the idea of it, but it was so volatile. It kind of didn't fit my investment type, I guess, thesis, which was trying to be market neutral, look for discrepancies, and it was very difficult to value at that point. And clearly, we see it's obviously appreciated quite considerably since then.
Oh yeah,
but that was kind of, and what really brought me into the space was the emergence of kind of DeFi and different use cases, because all of a sudden it just suddenly made sense. This cryptocurrency that was was highly volatile all of a sudden had value in terms of lending it and building services on it and all these sorts of things.
Right.
So that's when I went down the rabbit hole. Was probably more probably 2016, 2017, and then
all right,
as DeFi came in, sort of 2018 onwards. So yeah, it's been a steep learning curve, but it's been a lot of fun.
Yeah, no, definitely. I agree with you. It's a lot of fun. But I was kind of curious to ask you, you because you came from, I guess, to oversimplify things, from the traditional financial space. And I love the comment when you mention about Bitcoin or crypto, like it didn't fit your thesis. So I guess personally you had to learn and unlearn things. Would that be a fair statement?
Yeah, I think I've always fundamentally been a value investor. So looking
Okay,
at what is the trying to buy things that I view as undervalued.
gotcha.
And I think what was required was it's a big learning curve in crypto around what is the fair value of Bitcoin or Ethereum, and and what's interesting I think is, for me, the value increased as it became more popular because it's sort of a network effect of people using it, buying into it, having confidence in it as an asset class.
Right.
And that's almost an inherent part of the value of if everyone tomorrow decided that I don't know, playing a certain playing card had huge amount of inherent value, it's instantly got inherent value. So it needed something like that to kind of happen. So I think that it was less of unlearning, more say it shifted, and you could suddenly see, okay, well now it's gained traction, and there is a global network in place now of people who have a lot of faith in this, which exponentially increases its value, and
Right.
then it just sort of snowballed from there. So I think that's probably more it was the market developed to a point where the value was very obvious even to someone from traditional finance like I was.
Yeah, no, that's interesting. To hear your journey and your thought process too. So, anyways, let's talk about AQRU. So, so now you learn about crypto, you learn about Bitcoin, and you definitely dive deep into it. So, could you kind of take us? How did you start with AQRU.io? How did the idea come into fruition? So
Yeah, so I started managing my own money in crypto, and committing more and more capital to it as and it was because I was sort of looking at it thinking, well, I've got stable coin, which I had to learn about what stable coin was, and I've got Bitcoin, I've got Ethereum, okay, and then I'm like, okay, well, I'm lending out my stable coin at like 50%, this is or more, 200%, in 2018, 2019, this sort of time, and I'm like, okay, well, what's the catch, and I'm sort of putting more money in, doing more research, all these sorts of things. And, over time, the yields are dropping, but they're still, way higher than what you get in traditional finance. So then, I've got friends and family who I'm talking to about what I'm doing, and they're kind of throwing money at me as well. So at some point, it's like, well, probably need to make an honest business out of this, as opposed to just like managing it as like a multi-million-dollar side hustle with money sitting all over the place. So it sort of had to make it a professional product. And my co-founder Digby, came from the payments and sort of operations background, which was very complementary. So we founded the company because it was very. I think throughout my whole career, what I've really noticed is just the average person doesn't really want to dive into the detail when it comes to finances. They want kind of a trusted party who can just abstract all the complexity away, make it super simple, put money in, get a good return, take money out easily. And that's what we do. We sit on the top of all of the major kind of DeFi protocols, but we abstract all the complexity into the background. Customer goes onto the app, they can put normal fiat currency, or they can put crypto, and then we pay them the pretty much the highest rates you'll find in the market. So 7% on Bitcoin and Ethereum, and 12% on stablecoin. We're not sort of like subsidizing that with our own coin to say, look, we'll only pay you those rates if you hold a chunk of our coin and earn the yield in our coin or anything like that. It's put in Bitcoin, earn Bitcoin, 7%, same for Ethereum, same for stablecoin at 12%. So that simplicity, I think, has really helped the message as well.
Yeah, I love that the last word you just said, simplicity. I think that is a very powerful word because when I was in the space, when I learned about Bitcoin, read the white papers, and initially, obviously, I was more like a gold and silver kind of guy. If you don't hold it, you don't own it. That kind of thing, like kind of like a little old school wealth. Coming from my Indian background and all that jazz. But it took a leap of faith, but also some time to comprehend, the cryptography, then the free market economics, or the Austrian School of Economics, depending on, which side you're in, or just there's also the psychology behind it, and the game theory and all that stuff. And but then, obviously, as new people are coming into the space, and the one word that is really powerful is simplicity. Like you didn't try to introduce like a token, or I know because many other protocols have their own tokens and stuff, but here you just want to keep it simple. I think one way, I guess you are trying to get more people, more adoption. Would that be fair?
Yeah, I think the kind of customer, which actually, as I say this, it's increasingly not the case, but we always assumed we wouldn't be attractive to the degen yield farmer who's stuck in the detail. They've been doing this for 10 years. They love it. It's like it's their full-time day job, right? And I would almost include myself in that category. That I haven't been doing it for 10 years, but I've covered the majority of protocols, strategies, everything in the space. So, but that's not, we have a very different kind of risk category for our customers that we when they put money on the platform. But I think it's a case that the target customer really is kind of the mass affluent crypto amateur, probably, or holder of crypto. So we're trying to get those new customers into crypto, and who've been sitting on the sidelines for a long time. They've got a big bond portfolio, or like myself, like I had a property that was renting out. Yields on rental yields were dropping. Tax changes meant it was no longer really that efficient. So those sorts of things, and we traditional assets just moving into crypto, and we're seeing loads of that happening already, where people are saying, well, I'm just not getting the value I was out of traditional finance, because the markets have changed, so we're looking for something new. So there's that one element, but then obviously there is an element of people who hold crypto but aren't looking to do this as a day job, but want to get a good yield out of it. So transferring an existing crypto portfolio to us, because the yields we pay are kind of 50% higher than what they get with other centralized exchanges.
Okay, true. Okay, yeah. Just because you mentioned about the traditional financial space, they are getting into crypto. Do you have any maybe say one or maybe two examples about the traditional finance getting into crypto? Just for just the audience knowledge, just for history's sake.
Yes. So I speak to quite a lot of the big investment banks about their kind of crypto strategies, and it's really interesting. It's not, I guess it wasn't what I was expecting. So first of all, most of the investment banks can't directly hold crypto, so they have but they're getting huge demand from their customers saying, look, give us some sort of service in this space. Their big institutional customers are. And that's generally how these things work. The customers of the banks will push them, and then the banks will have to do something. And I think that's what we're now seeing. So the banks are really only in kind of like the securitized for the crypto space. They're doing on-exchange futures and options and things like that. So that's why you've seen this massive explosion in kind of that market. But what I think is really interesting from the investment bank is actually going more down the technology route, where they're using blockchain technology to try and improve a lot of the processes that they've got already in place that are seriously archaic. So, what the kind of things that they've mentioned are especially derivatives, like trying to bring sort of over-the-counter derivatives on chain. So at the moment, it's very difficult to sort of work out who owns what at times, and where kind of systemic risk sits. But if you can bring it on chain, it's fully transparent. That absolutely changes the game for a lot of these banks, because all of a sudden, if you know where stuff is, you can then more accurately price your kind of exposure and your risk, and it frees up way more capital for the banks to sort of get in and start investing in different areas. So there's a huge efficiency gain there that we're seeing. So I think that's one area that we're seeing at the very, very top end in the banking side of things. But in the smaller institutional sort of market, we have quite a lot of customers that are just normal, either fairly crypto savvy businesses or kind of fintechs. They have treasury balances after maybe doing a fundraise, and they just don't want it sitting in the bank. So we've got a lot of companies that they're literally covering the majority of their operational expenses by earning yield on the crypto that they hold. Generally stable coin. They're not looking to hold Bitcoin and Ethereum, but they are, so you're seeing corporate treasuries move into crypto, which I think is really interesting. And we have we're a publicly traded company ourselves, but we have
interesting.
We have some publicly traded businesses that also have funds with us as well. So it's a fascinating area of the market. And I think institutionally that there's a few things that need to happen for that massive wave of capital to really, really come into crypto, but it's already trickling through.
Yeah, that's interesting. Yeah. Hey, thank you for that incredible insight, because when you mentioned about some of the, I guess, top investment, banks or whatever, like just recently, Goldman Sachs, right? They're trying to have some sort of partnership with the FTX, with, Sam Friedman Bank. I don't know if that's the guy's name. Because I remember maybe like in 2020, Sam Friedman was trying to buy Goldman Sachs, but now, you're saying, and it's a crazy thought, right? But now Goldman Sachs is trying to partner with FTX. I think in the area of derivatives. That was interesting. So it's interesting you talked about that. I could be wrong, but I need to double check on that.
I say it wouldn't surprise me to say, because they want to be in the security space, I'm sure. So they're allowed to touch. They'll be allowed to touch things like futures and options, which obviously FTX do a lot of. But not the direct kind of crypto holding. So yeah, probably a nice fit if true, probably a nice fit.
Yeah, sure. Yeah. And, but, just want to focus on, your average Joe and Janes out there, who are getting into crypto and, getting into stable coins and stuff. Do you think like, more, your regular users, like they're getting into crypto because, they are seeing, inflation in their respective countries? The money printing is kind of crazy, like especially in the United States. It's a clown world out there in terms of money printing.
Yeah.
So do you? What is your take on all that?
It depends on kind of the demographic that you're speaking to, but I think probably depressingly, I've seen, speaking to people kind of coming out of college and university, that sort of thing. They're in crypto, and they're on the forums sort of punting penny stocks because they don't believe in traditional finance. They're looking at their student debt, they're looking at the price of houses, and they're like, there's no way I'm ever going to be able to make any kind of financial headway. So I have to take insane risk to try and 10x my money every year. Otherwise, I'm not going to get anywhere. Which is quite sad because people are pretty demoralized by the way the traditional finance is working, and they feel like they're going to get left behind, because they kind of will at the moment. The way that inflation only really helps people that are holding loads of assets, and what we've seen is that so it's effectively just going to do more of what we've seen since kind of the start of quantitative easing, which is those who held assets, asset inflation outstripping kind of wage inflation. So those who are salaried sort of lose out to those who've already got lots of assets. So that kind of income inequality is going to continue to grow with what's going on, unfortunately. And sadly, as interest rates rise with it, it's going to hit those who have debt the most, which will probably be the lower tiers. So it's that's not a great situation that you see. But on the more positive note, I think when you're getting to that kind of, the millennial class, who is, now hopefully in their, they're sort of in their 30s and 40s, and they are, they've hopefully done well, and they've got some sort of, escape trajectory away from debt, and they've got some free income, and they've got some assets, that sort of thing. Right. They're looking at crypto now as a proper asset class, not as a speculative investment, but as somewhere which, if you have a diversified portfolio, 10% of it should be sitting in crypto, because it's been the best performing asset class the last 10 years. Yeah. And, they're doing some really smart kind of asset allocation within crypto to try and outperform traditional asset classes.
Yeah, and that's interesting. I think when it comes to cryptocurrencies, I guess in terms of the rate of return is like it's incredible. I think like because I have some friends, even also from my portfolio too, I have to like make like a lot of adjustments,
Mhm.
to balance things out and stuff. So, um, but but I was kind of curious to uh, tell you like when it comes to crypto adoption, uh, I think right now we are maybe what around 4% or maybe 5%. What do you think about that? I mean, now we covered all that, about inflation and also, the millennial generation,
Yeah.
the Gen Zs, and also let's talk about Gen Alphas too. I'm sure they are going to be driving or, moving out of the traditional space into the crypto space. So what would be your, not prediction, but I guess in terms of expectation and how AQRU is going to like capitalize on that?
Yeah, I think there's they talk about the kind of wealth cascade that's going to come, that the baby boomers' wealth is going to pass on to the next generation, and that's kind of the biggest wealth transfer event that you're likely to see. And
Yeah.
they are transferring that wealth to a group of highly technically savvy and probably fairly I don't know, fairly a group that's not hasn't got a lot of faith in the traditional asset classes, having grown up throughout the financial crisis and things like that.
Right.
So you're going to have a really interesting sort of dynamic there as all of this wealth comes through to the next generation. They're probably unlikely to, use their old grey white, a financial advisor that their parents used, and they're probably going to look at more tech savvy solutions and broader stuff. So
Yeah.
I think, I'm really excited to see how the crypto wealth management space develops. And I think AQRU will look to be a part of that because it's, we're effectively helping people now generate yield on their, on their digital assets. And, we will, our mission is to be the best. We want to be the best in the world at helping people, well, of generating yield on crypto assets. That's our and we're hiring aggressively to build a team that is absolutely world class at doing that. So I think it's that's going to whatever we do, that's going to be the core. That we're going to have
Right.
a lot of
Yeah.
expertise in the space, and what the opportunities are that open up is going to be, will be dictated by the market. But at the moment, just a very simple platform like AQRU is sort of
Mhm.
really on the money in terms of what the market needs right now.
Interesting. Yeah. I would like to ask, like, with AQRU, you guys are paying, quite high rate of return compared to, your other, I guess, yield as a service companies out there. But I was kind of
Yeah.
curious, like, how you guys are able to, pay those high rates, with, BTC, Ethereum, and what are the, and also can you just mention some of the stable coins as well you guys have? Uh,
So we tend to stick to the main stable coins, so USDC, USDT, and DAI. So
okay.
those are the main ones. We and then Bitcoin and Ethereum, and for some of the institutions that have come to us as well, if they have large sums that they're in other coins that they're looking for help on, we will obviously offer a service there as well. So we manage we help generate yield on other coins at the same time. In terms of how we do it, I think this comes back to where we're a bit different. I mean, most of the kind of early incumbents in this space, the big names that you've probably heard of in kind of CeFi yield generation,
Yeah.
they make the majority of their money by just direct lending on a custodial basis to to other institutions. And
Okay.
that market is getting more saturated, and rates are getting more competitive. So the
Right. Yeah.
underlying rates that these big institutions are willing to borrow is going down. So I think we don't do that, and the reason they do that is because they've got $20 billion, which we don't have yet. But
All right.
they have $20 billion, so it's the only way they can kind of deploy that level of capital is through that strategy. So I think their yields are coming down, and I think they're going to continue to come down because
Right.
that strategy is going to is not going to be is going to continue to be too competitive. So where we're different and how we generate our yield is we've got pretty much the longest track record in the market of generating yield from decentralized finance. So that means using the major protocols and use and innovative strategies within those protocols to generate yield in a risk adjusted way. And that allows us to pay much higher rates because we're generating higher rates in the background. And I think that strategy is good for the first few $1 billion that we have onto the platform, and then we will have to look at other ones. But at the same time, the kind of strategies these incumbents are using are also being done better on DeFi. So we recently added Maple Finance to our platform, which is a DeFi platform that does sort of not fully collateralized lending to the same counterparties that are being dealt with by these incumbents. But the key difference there is the transparency. So you can see exactly what margin's being posted. You can see the loan terms, the loan rates, all those sorts of things. So that's a really exciting market, which again I think you're going to find is going to sort of take away from some of the bigger providers in the space already.
Okay, that's interesting. Yeah, no, thanks for the insight, though. I think it's interesting to learn. You do work with different DeFi protocols. But are there any more DeFi protocols coming into play? And are you guys also looking into those places as well, or do you have your own kind of like a selected DeFi protocols that you've done your own due diligence and stuff? Or
I mean what you're doing in DeFi is you're effectively generating yield in a non-custodial way. So you are exchanging custodial risk for smart contract risk or technology or hacking risk, however you want to define it. So the number one thing you've got to look at is the ability for these protocols to either their smart contracts to be hacked or their kind of their mechanisms to be manipulated in a malicious way. So what we spend a huge amount of time doing is screening every single DeFi protocol out there, and there are a lot. But really, we effectively have to very quickly exclude 99% of them. And we're not on the forefront of this stuff because the new protocols, although there's some great new ones that come out, they're pretty untested to begin with, and they love their this is in beta, use it at your own risk. It's like, well, you're not going to stand by your product. We're not going to give you money. All right. So I think it's a case of of like we use the most tried and tested protocols that have billions of dollars on them already. Everyone on the planet has tried to hack them and been unsuccessful, or if they have been successful previously, we know what the vector was, and you can see what the team has done to improve it. They're audited. Who the management or the founders are, and it's these sorts of things. That it's not rocket science that the majority of hacks in DeFi happen to new protocols or new ways of doing things. The tried and tested. When was that, for example, like Aave, for example, when was the last time they were hacked? They were like one of the first lending protocols. And, so not saying we use them because, the yield is come down too much on their platform, but, it's a similar ilk that we're using to really gain our yields.
All right. Okay. That's interesting to learn. Yeah. Learn something new. And of course, I know you're dealing with the DeFi protocols, but as far as AQRU.io is concerned, you guys are, I guess, regulated, right? Because you're we're a centralized exchange. So the way the company structure works is, we have a parent company that's a UK. It's listed on the UK London Stock Exchange or Aquis Exchange in the UK, and that then effectively owns the businesses that carry out the crypto activity, which is licensed out of Lithuania. And we go through the normal KYC process when onboarding customers. There's a rigorous transaction monitoring process that we do, all these sorts of things. So our view very much is that regulated crypto is going to be 10 times the size as unregulated crypto. So the sooner we can get, because every institution I speak to, the reason they're not invested in crypto now is because they haven't got regulatory clarity. And the moment they do, I think that's going to be the next bull run. And it might be really counterintuitive, but the thing that's going to really push these to the next kind of,
3, 5, 10x is when, there's a regulatory framework where institutional investors can enter the market and then resell these products to all of their customers. And that's where the, huge amounts more demand or more size than we've got in the market will come into it. So, I mean, that's probably going to be the next big catalyst.
Yeah. Yeah. I think in many ways I can agree with that sentiment. Because even some of the folks I know from the traditional space here, whether in Dubai or the US, I think for institutions, I think they do care about regulations because it's all about dealing with the legality, and also, of course, they are also handling other people's money. So there's what do you call that? I forgot the term, fiduciary responsibility. So they have to be extremely careful. But at the same time, too, a lot of them are excited about the crypto space just because how incredible the tech is, and I think when it comes to the internet, information, and money, there is a revolutions taking place. Like it's like 3 revolutions in one place. So so I can understand they don't want to miss out, right?
No, I mean, obviously Dubai is been very vocal about their new kind of regime that they're pushing out. They're encouraging companies to come to Dubai and work and work closely with the regulator there. And I think we've seen what is it, FTX and Binance making big inroads there. So it's good to see that it was almost like overnight. The US said we want to be a crypto hub, then the EU said we want to be a crypto hub. UK said it, and then Dubai kind of trumped them all and saying we want to be a crypto hub, and this is how it's going to work. So it's
they took the extra step, right?
They took the extra step because all the rest was just noise. It's kind of people saying, we want to be a crypto hub. Okay, great. We want you to be a crypto hub as well, but how do we do it? What's the regulatory framework? And they're nowhere near sort of producing that yet. So for a respected jurisdiction like Dubai to come out with this is our framework, this is how it's going to work. Great, that's the kind of step you need, and that's where that's how you become a crypto hub, is by being clear and making the goalposts where the goalposts are well known.
Right. No, definitely. We were just talking about crypto hubs. Because I've talked to different entrepreneurs and stuff, different co-founders, and I've talked to folks in Texas, but most of them are mostly focusing on the mining side of things. Then when it comes to like Colorado, or maybe some other place around the world, like Paris, there's a lot of developers meeting up over there, really talented folks. Definitely, Dubai has been really active, and there's also I know maybe obviously I'm biased. Just to let you know, I was born and brought up in Dubai, so obviously I got to show some love for my city, DXB all the way. But I want to ask you, Phil, because are you currently in the UK right now, or are you in another location?
So I'm in the UK at the moment. Yeah.
Oh, okay, cool, awesome. So actually, the next question, just for me, I'm kind of curious to know what's the scene in the UK in terms of cryptocurrencies and blockchain, because I have met up some pretty smart developers and founders, from the United Kingdom. So I'm kind of curious about that place, though. What's happening over there?
Yeah, so the UK has historically been a very, very proactive for sort of regulation and, for attracting fintechs coming into the space. And I think they came out recently to say, look, we want to be a crypto hub. And, it's now a case of the regulator sort of catching up, and they've been reviewing a lot of applications. I think we had over 200 crypto applications over the last kind of 18 months.
Oh, okay.
So there's a lot of companies that want to set up shop here and are really keen to do so. So, I think it's got all this fintech talent sitting in London and elsewhere around the UK, all of whom have a real interest in crypto. So it's just you've got to feel for the UK regulator a little bit, because out of nowhere they suddenly had this asset class pop up, which kind of 3 million people invested in. And then they started getting complaints that they were getting, some people were getting hacked or ripped off. So their kind of first sort of priority was to sort of police it, and then to go out there and police the space. before then, now, which is hopefully what they're moving on to now, which is like now let's regulate it. Now let's bring it under the some sort of supervisory effort, because they have done, but they've only probably signed off like half a dozen or a dozen firms so far. So keen to see how it progresses. And I'm a proud Brit, as you're a proud Emirate yourself. So it's sort of like I'd love to see the UK retain its place as a decent place to do business in the fintech space and crypto space. So yeah, I'm fairly optimistic that we will do.
Awesome. Okay. Yeah, because like the only thing I'm sort of like jealous about the UK in particular, as well as Europe, is you guys can't spend your crypto using a Visa card or something. So I was like, because over here it hasn't happened yet. I think in the UK, sorry, in the United States, yeah, definitely for sure. You got like your BitPay, I believe also Celsius too, which they also. I don't know whether they have their own card or not. Of course, crypto.com. I know they're pretty active in Europe, but it hasn't happened here yet. So it'll be interesting to see, because personally for me, I'm definitely passionate about crypto adoption on the local level. Like, say, for example, hey, like, say, you and me, we meet up in Dubai. So we got done with the AIBC summit. Hey, let's go grab some coffee. Let's go grab some drink. And so using, fiat, dirty fiat, like, I know.
Yeah.
Or just using a Visa, or just like some other fiat card or whatever. Hey, I want to buy a drink. I want to buy a coffee in crypto. So do you see that future coming into play in the near future or further along the line? What do you think?
I think it's there. I think it's, as you say, it's there already in a lot of jurisdictions. So,
okay.
I think there's a couple of bigger companies that have just released it as well. Crypto.com was obviously done a good job there. I don't think Celsius have quite launched their card yet. It's been in the works for quite some time. But there's loads of options where I think people can do this well. And it's for me, the although it's being done, is it being done well? Often I think the costs, the conversion costs, and the kind of charges that are associated. It's all very well spending your Bitcoin in small amounts, but if there's like a conversion where the fees are kind of like 2 or 3, 4% to make the conversion, then really it's just a nice cash spinner for the company doing it, and not seeing it done in a very customer friendly way yet. There's loads of hidden fees generally around the conversion rates. So until that gets nailed, I think that's going to stop adoption, because any savvy customers will look at it and say, well, hold on, this is what the fee, although it's small little amounts. As I buy a coffee, it's still increasing my outgoings by 3% or whatever. So yeah, I think it'll be done in the short term. I think you'll see it being get more and more ubiquitous over the next 12 months. Because it's amazing when you think of just normal fiat. Like, I think in the last 2 years, I went from I never carry cash anymore, like ever.
Right.
And I don't even carry a wallet. I do everything off my phone now, like with Apple Pay. So it shows how much and I'm how much you can change sort of behavior in just a few short years. And there's very little difference between me tapping my Apple Pay and tapping an app that has my crypto on it. So, I think we'll see it. I think we'll see it happen quickly. And when it's available and it's as easy to use as Apple Pay, then that's where real adoption comes.
Oh, sure. I can definitely agree with you on that. Because when you mentioned about the fees and stuff, I mean, obviously, it's in some way, it's through an institution or some other third party, So, but as far as I remember back in the States, I remember some of the coffee shops, people just directly pay from their crypto wallets, instead of using through MasterCard or Fiat or some other third party banks. So I'm kind of curious to see people over here, especially like in Dubai. I would love to see that happen where, hey, they pay like in directly with, say, like, Bitcoin Cash or something. I know if I were going to pay someone BTC, the transaction fees are too high. I mean, so that's going to be more like a hodl game than a digital cash approach,
Yeah,
But
absolutely.
so yeah, but yeah. So is there anything else interesting about AQRU.io that the good
Certainly
folks
hope
need to
so.
learn?
Yeah, certainly hope so. But no, it's I think we're we've been growing at a crazy rate recently, and and we've been having some great success in the center that you're based in. So we've we're kind of onboarding customers globally, and yeah, it's been a bit of a wild ride really over the last couple of years, and I think we are sort of looking for as much feedback from our customers as we can. To download the app, test it out. We, as I say, we pay the highest yield really out there in CeFi.
Right.
There's a lot of people who say we pay higher, but the moment you look under the hood, it's just not the case. You have to hold a ton of their token. You have to do X, Y, and Z, and it's smoke and mirrors. So
right. Agreed,
we're genuinely there with a decent yield. So I'd encourage people to check it out. You can get us on the Android or App Store or on the web. The tool there is very, very simple to use. And, if you want to use us to buy crypto as well, it's completely free. We don't charge any fees. So you can, transfer.
Oh, okay.
Yeah. So the way it works, you transfer, either just say you've got existing currency that you want to transfer, convert into something else. Or you've got, fiat currency that you want to deposit onto the platform. We quote you a price. That price comes from a panel of market makers. Whoever gives the best price to us, we just put straight through to the customer, execute at that price, and you're done. It's so we don't make any money from exchange. And
interesting. Yeah. Okay. All right. Okay. Because I was thinking, it's true. Like your payment provides, like sorry, and I didn't classify them properly, but your usual, say, like MoonPay or banks or something like that.
Yeah,
but
yeah.
that is kind of clever using market makers. That's very
Yeah,
clever. Yeah.
and I think that is like a lot of there's no good provider that I've seen for putting money, buying money from a credit card. There's
Right.
every single one of them is. I think the cheapest we've seen is about 3.5% to 4%. It's dreadful, and it's a dreadful experience generally. So if we can, we're just encouraging people to do bank transfers. If you do a bank transfer, it costs nothing to hit our to transfer that into our account.
All right.
And then you can, because you get your own account, like fiat account, when you open an account with AQRU, and then just buy crypto that way. It's the cheapest way of doing it. And a lot of our customers set up kind of regular payments where they just dollar cost average their crypto holdings.
Nice. Okay.
Money coming in, and So there's so many places which are charging an absolute fortune and doing loads of volume. So we need to stop that. It's like most exchanges charge fees. We don't. Most people are buying. A lot of people buy crypto using credit cards. Stop doing that because it's really expensive. And start doing it through bank transfers, because that's the way to do it. It's a lot cheaper.
Interesting. That's good. That's a good point. That's a good point for a lot of people to be aware of. I guess a lot of people use cards. I mean, it's just because it's just convenient. Yeah, it's just convenient. And of course, if you want convenience, you got to pay for it, right?
Yeah, exactly that. So I'd say if people can move to bank transfers, but otherwise, we're
good tips.
Yeah.
But so finally, just with to end off with AQRU.io, other than you, Phil, could you kind of like give us a background of your other amazing team members who are making the magic happen at AQRU.io?
Yeah. So, I mean, my co-founder, Digby, he's 8 years in payments. He's helped some of the biggest crypto companies in the world set up their fiat rails, which is why ours are so good, because, that's one of our core skills. We've got a CTO in Louis. I mean, I think he was the first hire that we made was our CTO. And I think, that's one of the things which I'm, really proud of is the tech that we've built and the time frame we built it in. We did it with 2 developers, like Louis and Gary, and they're both they're absolute, they're absolute like legends in this. And they have just, in 6 months they built, what I think is one of the most scalable, simple to use, and secure platforms in the crypto market. And we speak to other companies that have had like 20 developers, and they haven't managed to build what we've managed to build in 6 months, and they've been at it for years.
Yeah, that is impressive.
Yeah,
that
so
is ridiculously impressive.
So the tech guys are amazing, and then anyone who goes on our app will find very quickly, it's a bit rare in crypto, amazing customer service. And we've got this team in Bulgaria, which Bulgaria is an amazing center for very, very smart, educated, and crypto savvy employees. And we've built an amazing team there, which is, if you ask them questions, they're extremely helpful. They'll educate you. They'll walk you through the process. We get nothing but amazing feedback on them. So if you do go on the app, use the intercom function, have a chat with them. They're there to help. And finally, compliance. We've got an amazing compliance team. Make sure we're doing everything in a customer friendly but highly compliant way. And we've got a fantastic team there. So I've probably left some people out, but it's the client base and sort of business is doubling every month at the moment. So it's been a bit of a roller coaster, and the team's growing. So it's I'm sure I'll thank them with a bottle of champagne or something in the future.
Absolutely. Hey, look, I mean, to start a company, to build a company, and and that also in the crypto blockchain space, definitely, I think it's important for us, after all that hard work, we also got to have some downtime to celebrate and just enjoy those times, right? Because I remember like a couple of years ago, like how much of negativity the crypto and blockchain space has received, and we just like strive on, and and also and still, I mean, we are still doing that. We are still continuing. It's growing. So I think it's important for us to celebrate those wins. Personally for me, that's.
No, I'd really agree with that. And it's so easy to you have these very long term big objectives, and so you kind of get lost in the noise, and you don't take a moment to sort of celebrate. And I think a lot of we're certainly guilty of that, and appreciating how far we've come is something we probably don't do enough of.
Yeah, and just one last point when you mentioned about Bulgaria, I know some one or two VCs over here. They already have been focusing on the Bulgarian ecosystem. So so I was aware that there's some pretty good talented people over there too. So
huge.
That's also again a pretty smart move, and you did that way before. So congrats on that. Yeah.
Appreciate it.
They definitely. But anyways, I think we are almost at the end. Before you go, we have a lot of young people who are curious about entering the crypto and blockchain space. I mean, could you give some sort of career and life advice, for them to get into?
I'd say, I mean, I think it depends on if you're just looking to get into crypto. If you're looking to be a founder, I think, make sure you only really work in general. Try and keep your career as general almost as possible. One of the areas which I think is quite dangerous is when you become highly specialized very early in your career. So, I can point to an area when at one point in my career, I was doing kind of Russian FX derivatives, and, in which is like a tiny, tiny market. And, people will do that for 20 years. At the end of it, they're completely unemployable, so it's like, it's, I think being general and, working in small entrepreneurial businesses, I think is a lot of fun. I've only ever worked in kind of entrepreneurial startups and businesses like that. And I think that's been really good fun. When it comes to crypto, I'd say if you want to get into crypto, start with the tech. So, do one of the courses. I'd say do courses, understand, there's loads of free courses out there on kind of the big online learning centers, and, do something on blockchain, understand smart contracts. By far the easiest way to get into tech is to also learn how to code in Solidity, and others.
Okay. Yeah.
But if you want to just get into it in sort of a more general way, as opposed to the sort of the technical side, learn about the tech and then do as much as you can with your own money. Try multiple chains. Try investing in DeFi. Don't just buy the latest sort of social media sponsored coin.
Yeah.
So that would be the advice I'd give.
Yeah, but would you also because also for our space in the crypto and blockchain space, do you think marketing, PR, I guess the branding side of things, do you think that will matter for the crypto blockchain industry?
Yeah, I mean we use a ton of external PR and marketing teams, many of whom are they're specialists already in the space. It's sort of the big part of their business, pretty much all they do. So it's they'll all be needed.
Yeah, I mean the only reason I brought that up is because I have met some amazing founders and folks who are technically sound. There are also others from the flip side. They're in terms of their investment skill sets is exceptional. But I personally see there's only few players who know how to market and brand crypto and blockchain. So. Is that something like? Because I know you also talk to other founders in the space too. So, is that something of concern or?
Yeah, I think it's going to the space is getting increasingly noisy. So you need to do a good job of just differentiating yourself and building a good decent customer base, having a brand people can get on with. So it's I think it's incredibly important, and I think a lot of customers, as we're not in a kind of crazy bull run right now, it's harder to attract new investors into the space. So it's and it's harder to get people to look at it. Most people are kind of got their head in the sand; they don't want to look at their portfolio because it's massively underwater. So it's I think you need to be better at marketing, and I think that's why building in these kind of markets is great because you're kind of you're in the struggle. It's not easy,
right?
And then when it gets easy, you're doing way you haven't been complacent. You're doing stuff that So it builds tough companies. These kind of markets, which I think is what you need to be.
All right, yeah, no, that's interesting, man. Hey, thank you so much for sharing your insight. Definitely, I definitely also want to give a big shout out to John Mark for making this thing happen. I'm glad. All I can say is that I'm glad me and my other buddy, we just thought, okay, let's grab a cup of coffee. We sat at this random table with some random people, and next thing you know, conversations happen, and here we are. And I'm talking to the one and only Phil. So I'm highly appreciative, and also got to learn something new too. So.
Good to hear. JM is the most connected man in crypto, I think now.
And Phil, look, the best is yet to come. So,
exactly.
And definitely, and look, on top of that, you guys have a great product. I think I just love the fact that it's so the user experience is great and also simple to use too. I think that I think that's one of the ways we can increase crypto adoption and get more people in. So anyways, I think it's about that time. I know you got to make some magic happen and do some great stuff. But before you leave, do you have any plans to come to Dubai?
Well, when are we coming back next? Definitely. It was a great. I mean, we've got a member of our team over there already.
All right.
Who's running around? Who sort of consults on our marketing side.
Okay.
So we're always going to come back. I'm sure we'll come back for any of the big conferences, and it's a fantastic place to do business. So we love being over there, and it certainly beats the weather in the UK as well. So it's good. Maybe getting a little bit hot for us Brits soon over there, but
right.
Yeah, we're very keen to keep coming back because it's it's a great place. It's very crypto. It's exploding in terms of crypto popularity. So we'll be back soon.
Mm-hmm. Awesome. All right. So hey, before we end, Phil, if people want to find out about AQRU or find out about you, where can they find you?
best place. I mean, go on to AQRU.io. AQRU.io is the site. Feel free to reach out to me on LinkedIn as well. I love chatting to our customers, and we love feedback. So make sure don't hold back, good or bad. We love to hear it, because it's we've got a great tech team, and sometimes get feedback in the morning and the change is done in the afternoon. So it's nice. We're very, very agile at that, but it's all dependent on people feeding back what they think of the product. So yeah, much as you can, we'd love to hear from you.
Awesome. All right. And of course, hey, y'all, we're going to share the links below. So they're definitely really good. I'll share his LinkedIn as well. And also John Mark too. So because, he's my guy. So anyways, it's about that time. We got to go. And as you know, in the cryptocosm, we're all about how cryptocurrencies and blockchain-based solutions are going to revolutionize the internet, information, and money. And personally, for me, I do believe that cryptocurrencies and blockchain-based solutions will not only increase your financial confidence, raise your human capital, but also, the goal also to help spread economic and financial freedom for the world. So that's my message. So we got to go. Y'all be good. Y'all be safe, and we will talk to you soon. Bye for now.